Mortgage interest rates gonna go up to 10%. What is this? What is all the madness going on in the market? Hey everyone, I'm Bruce. I'm a real estate agent in Seattle metropolitan area. We're actually here in Central Washington today. This is one of my listings. And I've been thinking about this because it's been a little bloody for listing agents. Honestly, if you're a listing agent, you're feeling a little bit of pain because buyer demand just isn't the same as it was a few months ago. So especially you should be worried if you're a listing agent that just takes listings, puts the house on the market, doesn't clean, doesn't replace carpets, doesn't do much marketing or good photos or anything like that. But anyway, we're outside, we've got a good view of the valley, so let's talk about this. Because a lot of people are saying that maybe mortgage rates are gonna go up to 10%. Interest rates are at 5.5% right now. But to talk about this whole story, I just wanna go back really quickly and summarize what's been going on for the past 2 years. Well, the pandemic happened. Every government shut down the economies of their said country, meaning we're gonna need some economic stimulation in order to keep everything from going off the rails. So what the Federal Reserve of the United States did is they lowered their benchmark federal funds rate to 0, which was unprecedented. Now, mortgage rates are a little bit different. They're not exactly the federal funds rate because you might remember in the past few weeks, the Federal Reserve raised the interest rates by 0.75%. But if you're looking at the graph, you're seeing, whoa, why didn't the mortgage interest rates just go up 0.75%? Well, it doesn't work like that because you're dealing with what they call the secondary market. Mortgage-backed securities are dealt with and sold on the secondary market. So once you get a loan from your bank, most likely they're gonna sell it to the secondary market, and prices of mortgage-backed securities actually act a lot like bonds in that way. The more people that are buying them, the lower the rates. The less people that are buying them, the higher the rates. So they work a little bit like bonds. Now, the Federal Reserve, note, they didn't just decrease the interest rates to 0. They were actually also buying a ton of assets. So directly stimulating the stock market, directly buying stock, and directly buying mortgage-backed securities. So those were the two things that the Federal Reserve was up to: stock, mortgage-backed securities. Now, they're not doing that because there's inflation. What happens when you have too much economic stimulation? You get inflation. You get inflation when you have too much economic stimulation and too much free, cheap money for too long. So the Fed had to bump the rates up again and stop purchasing mortgage-backed securities. It's like, Fed, what are you doing? We don't have the money here. You're inventing the capital. What's going on? This is kangaroo court. That kind of situation. That's how they all talk to Jerome Powell, by the way. The lack of support from the Federal Reserve on the mortgage-backed security market, the increasing interest rates, so it's putting a lot of fear in the market, right? Meaning interest rates, mortgage interest rates are gonna be going up consistently. And many people have made predictions. Are they gonna go up to 6%, 7%, 8%, 9, 10? Is it gonna be like in the 1970s when mortgage rates were at 18%? I don't know. I don't think the government would let interest rates go up that high. Housing would be totally unaffordable. But what we are thinking about is, where are those rates going to go? And a thing I like to think about is, well, right now we're at 5.5% and there's decreased buyer demand. We used to have 30 people come through open houses and now maybe we have 1 or 2. Now there's a decrease in buyer demand at 5.5%. But I like to look back at the charts, okay? Is 5.5% really a lofty number for an interest rate? It's really not. You look back just a few years. So I think that a lot of people got spoiled with getting a mortgage at 3%. I mean, it's basically free money. Inflation is supposed to be at 2%. So if you can get a mortgage at 3%, it's almost a free loan. So 5.5%, in my opinion, not too bad, okay? 5.5% was what we saw in the early 2000s. But is it gonna go up to 10%? Short answer is, I don't know. No one knows. Who knows? Would you still buy a house at a 10% interest rate? That's my question.